Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Thursday, March 1st, 2018, and here are some of today's trends in the news. On the market front over there in Asia, Nikkei down over 1%. Shanghai, Hang Seng, beep, up a little bit. Over there in Europe, boom, markets down, CAC down over 1%. Here in the States, bam, boom, Dow, NASDAQ down. Oil down. Gold flat. Bitcoin up. So what's going on? Well, the business media is blaming it on Dow closes down more than 400 points after Trump says steel and aluminum tariffs coming. And they're saying that's the reason the markets went down. But you know what that is.
Oh, come on now. That ain't even bullshit. That's horse shit.
That's all it is. It's business media horse shit. Because what really happened today is that Fed chair was out again. Yeah, Fed chair. Fed stool, or is it stooge? They all are. Talking about how good the economy's doing. That's right. And the fear that they're going to keep raising interest rates. But interesting today, when he said that, Powell, markets start going down, and gold was down $15. Bam, it bounced back up as the markets went down. Now look what was going on with the markets before. When the markets were tanking, so too was gold. It was following it down because of the fear of higher interest rates. But now all of a sudden it's done a reversal. And so too with the cryptos. They're bouncing back up, even touching that 11,000 there for Bitcoin. And we're saying that Bitcoin has to get strong over the 11,000 mark for it to move forward. As a matter of fact, today we're coming out with another forecast. As you've heard me say over and over again, for 4 years, gold has to go over $1,450 an ounce to shoot up very fast over the 2,000 mark. Hasn't been able to get near there. Now, with Bitcoin down from its high of nearly $20,000 to hovering around 10, guess what? We're putting it in the same field now with gold, except that you got to go up 10 times more. In other words, Bitcoin has to break above 14,500 for it to gain its momentum back. But going back to gold, again, the prices of gold go down as the dollar and interest rates go up. So now with the Dow going down, gold's saying what we've been saying, they may not be rising interest rates as fast as some have anticipated. So we'll see what happens, because the markets can't take it. This has nothing to do with steel and aluminum tariffs, because as you well know, read your trend alert. Trend alert. Go back to February 6th. First to call Trump rally, first to call correction. What's next? That's right. In December, in our Trends Journal, we said there would be a 10% correction in 2018, and it happened. It's come back from that 10%. Read your trend alert. Trump rally peaked. Correction or market crash. That was February 14th. Read your trend alert. Equity market forecasts. Correction, crash, or new highs. Nope. No new highs, we said. It's peaked. And what did you get just yesterday in your trend alert? Rising interest rates rattle markets, housing sales slumping. What's next? And the slump is real in housing. Because when you look at the data and start going over the facts, you can see that the nation cannot take higher interest rates. We outline not only the nation, which is $20 trillion in debt, but also all those folks around the world, right? You got global debt at $47 trillion. What happens when interest rates go up? Who's going to pay that dough? So here you go. Nobody. Can't do it there, can't do it here. U.S. consumers struggle to repay credit card debt. Overdue U.S. credit card debt has reached a 7-year high, underlying the difficulties faced by many consumers in spite of the strong performance of the economy. You know what that is.
Warning, warning, bullshit alert.
It's all it is. All of this stuff is nothing more than bullshit that they keep pushing out there. No, you're confusing the equity markets with the economy. Wages stink. Yeah, the economy's growing a little bit, but look at wages. Again, read your trend alert from yesterday. It's right here. With disposable income increasing just 1.9% and a rate rise of 4 or 5% for 30-year loans spiking monthly mortgage costs 12%, the average American is being frozen out of the market. That's, of course, what we said about the housing market. And then we went on to say Americans owe $13.1 trillion in consumer debt, including $1 trillion in revolving credit cards, and household debt is rising at a rate of 60% higher than the increase in wages. So what they're putting out here is nothing more than
That was bullshit.
more Americans are also falling behind on their mortgages, for which problematic debt rose 5.2% over the same period. The figures published yesterday by the Federal Deposit Insurance Corporation add to concerns that in spite of the strengthening economy, parts of middle America are missing out and are relying on credit cards to get by. Again, this is not an overall strengthening America. It's a strengthening equity markets that's been booming. So you have more debt, rising interest rates, higher costs, greater burden. What's driving the markets up? Exactly what we've been writing, exactly what we've been saying. This is what's going to stabilize the markets. Again, we're saying the Trump rally peaked, but for a period, there's going to be strength to keep it up. And you know why? Because exactly what we had forecast. When they repatriated the money, all the money they were hiding overseas, the big multinationals under George Bush back in 2004, the early 2005, around that time period, they brought back all that cheap dough, and over 90% of it went into stock buybacks. So the Trump tax policies that have lowered corporate taxes from 35% to 21% and allowing them to bring all that money back home, it ain't going into capital improvements. Folks, they're folking us again. Yep, U.S. companies are buying back their shares at an aggressive pace. Share buybacks announced by large U.S. companies have exceeded $200 billion in the past 3 months, more than double the prior year, according to a Wall Street Journal analysis of data for S&P 500 companies. So again, you read the propaganda and they keep repeating the lines. difficulties faced by many consumers in spite of strong performance of the economy. Two different worlds. Going back to the Fed, in spite of a strengthening economy. Wrong. It's only enriching the rich. Like Amazon made $5.6 billion in profits last year and reportedly paid, you know how much in federal taxes? Folks, try zero. It's a neo-feudal society. Different laws for the political nobility and the economic elite. You went over that yellow line. You didn't have your signal light on. Where were you? Get out of the car. Stand on your head and repeat the alphabet backwards. That's how they bust our chops. But they're giving everything away to the rich at every level. The reason jobs stink, it's a monopoly in this country. They did away with the Robinson-Patman Act, Sherman Antitrust Act, Clayton Antitrust Act. They did away with the Glass-Steagall Act. That was the banksters rob us. Middle class. What class? No middle class. Gone. Shrinking. So here's where we're going back to the markets. The Trump rally is over. Will there be ups again? Yes. May even go higher. But it's peaked. Watch gold prices. Watch crypto prices. If the markets go down and you see gold and cryptos heading up, remember GC's 3Gs, Gerald Celente's 3Gs. Guns, gold, and a getaway plan, because it's going to get ugly. But the global economy isn't doing that bad, but not doing great. Again, watch what's going on in China. You've heard me say this over and over again. China's greatest fear isn't the United States. China's greatest fear is its own people. And the reason that I believe they gave Xi this unlimited power to keep running the place is because they're concerned about the economy bubble bursting. They have a debt to GDP ratio of 300%. You see a lot of friction going on now in the equity markets. Now with this Trump plan, and again, as we kept saying in Trends in the News, this is real regarding tariffs and trade agreements. And by the way, these imports really hit Canada, the ban, more than China. So we're redoing a NAFTA. So what's China concerned about? Trade. And again, I don't stand with Trump on just about anything except redoing these trade agreements, which have shafted the people. Us going from a manufacturing society of a much greater percentage, losing over 3 million jobs to China, to a lousy service sector society where you can't make any money. So going back to China, putting Xi in there now as supreme ruler, they're concerned about uprisings in China. There used to be reports that came out. They stopped doing it. Actually, they were coming out of Hong Kong. They would have over 40,000 major riots going on, most of them about wages. So not only is disparity of income obvious in the United States, same trip is going on over there. So there's a lot of concern going on. And by the way, you're seeing copper prices going down recently. And remember, Dr. Copper. Copper is the indicator of health of an economy. The more copper that's consumed, the higher the prices goes up, meaning more manufacturing is going on. And now prices are going down, and you're seeing slowdowns in manufacturing sectors, particularly coming out of China. So watch what's going on. But the world is much bigger, and there's a lot of more positive economic news coming out of India, for example. India overtakes China to regain top spot on global growth league levels. Yep. Yesterday, data showed India grew at an annual rate of 7.2%. China's economic growth accelerated to 6.9% last year. Several signs of slowing momentum have started to emerge, led by a fall in property sales and prices in many big cities. In January, the manufacturing index showed small and medium-sized enterprises particularly hard hit. So lots going on. This is a time to stay tuned. Get away from watching your identity news. I know you don't on Trends Journal subscribers, but tell other people, tune out of the mainstream media and start looking at the important facts. And of course, subscribe to Trends in the News, Trends Journal. You get it all, Trend Alerts, Trends Monthlies. That's where you're going to get the real facts, and we have it to prove it. We've been on top of the news and way ahead of the trends. Also, this week, an election in Italy. That's right, on Sunday. Let's see where this goes. Right now, a large segment of the population is undecided. What happens in Italy could either rattle the markets or maybe help keep them steady. So stay tuned. This is Gerald Celente, and that's some of today's trends in the news.
Your armchair is so grand.